Hello, it's Adil bringing you a review of the FTSE 100 for Thursday's trading to the November 20th, 2014. Okay, so I'll run through exactly what happened with regards to today's session on Thursday and exactly what transpired. Although I was stopped out my long position from the outset in the morning, based on the expectation that I'd see an oil rally and the oil stocks would obviously close the FTSE higher, and that was my bias obviously, and that was wrong, as explained in my video the day before, and that didn't transpire. Something else transpired, so we'll discuss that, and we'll certainly try to elaborate upon that and explain as to what's going on with regards to these markets. Okay, right, where should we start? Okay, so Asian session overnight was mixed. Hang Seng down, Shanghai flat, potentially positive, and the Nikkei flat to potentially positive as well. But having said that, like I said, my focus and my emphasis was on the commodities rally with regards to a talk of OPEC cutting production, etc., etc. So all those factors added together was expected to obviously create an environment for the FTSE to continue its move or ascension higher, especially with regards to the BOE minutes. Okay, and real wages increasing and inflation still tepid. Okay, and the BOE, even though there was there were conflicting reports with regards to the vote of being 7-2 in terms of, or in favour of, obviously QE. Or wouldn't say QE, it would say interest rates to remain low, etc. And two individuals obviously opting to go for an interest rate increase, even though Mr. Carney still remains dovish. So overall, like I said, 7-2, and therefore one can interpret that still being relatively dovish. So everything else still holds. Okay, so if we have, even though we did have weak economic data, so that was obviously having a negative impact on the FTSE. Now, one of the things that I didn't factor into the equation, number one, I did focus on the Japanese exports being strong. Therefore, okay, interesting. I'm just doing a video now, and Japan's asshole speed of yen weakening has been too fast. USD JP5 finding good sellers. Okay, well that's going to certainly cause a risk off and cause the stock market to sell off. Okay, well it's almost 2 o'clock in the morning I'm doing this video, so just keeping an eye on the because it's very important now, folks. I mean, just from a day trading perspective, it's very important for you to understand what's happening with the Japanese yen and what's happening with the Asian session, because that will dictate ultimately what happens in the European session and the US session. So you do need to dedicate a portion of your time now. And before, I never used to do this, but recently, obviously within the last year or so, the emphasis has been on the Asian markets. So it's all about reading the Asian markets and looking for clues and observing the news flow in the Asian markets in order to understand what's going to happen and the flow with regards to the European market. So this is going to be quite interesting and very important as well going forward. Okay, so something to some food for thought there. Okay, so let's get back to exactly what's happening here. Okay, so my focus was still bullish. When I woke up in the morning, even though the Nikkei was higher and the Shanghai was higher and the Hang Seng was lower, based on weak Chinese data, I put my emphasis on a stronger Japanese export sector as opposed to a weaker Chinese exports. Okay, so basically my emphasis was on that, and that was supposed to neutralize that effect. Okay, and adding the fact that you've got stronger commodities and the bias still remaining up for commodities, adding the fact that you've got FOMC that's dovish as well, so adding that factor as well. So FOMC was dovish, and the BOE minutes were dovish, and you've got Mr. Draghi being dovish. So everything else will still pertaining to a continued rally in the FTSE, especially with regards to the chart here indicating inverted head and shoulders formation target of 6770, although it is obviously you've got some hiccup here at the 200 MA. Right, so basically that was the situation there. Now, lo and behold, what happened in the morning, the FTSE obviously sold off. If I bring up a chart of the 10-minute chart of the FTSE 100, you'll get more of an insight. Okay, let's just bring up my chart here. So this is your 10-minute chart, so let me just get rid of all this. There's a lot of Okie dokie. Just part of the mentoring, really. Okay, so basically we had get rid of this. We'll keep this. Bear with me. Okie dokie. Right. So yes. So obviously we've broken through here. Okay. So right. So as you can see here from the outset, what do we see? We witnessed a sell-off. Okay. So from the outset, the actual FTSE sold off quite substantially, and that's basically what we witnessed. Okay, so you had this here, obviously we did break out eventually, and then obviously the markets moved higher. So basically we had a sell-off eventually, and the reason why is because rather than Japanese exports, the market focused on weaker Chinese data, okay, which obviously sent the oil price potentially slightly lower, okay, not significantly, okay. And the emphasis really was the unexpected data that came through. So the unexpected data that came through in terms of obviously with it being bearish was, let me just bring this up for you, was European data. Okay, so European data was basically the killer. Okay, so that basically sent stock markets low. You had European manufacturing PMI, Italian, German, European, all negative. Okay, so as you can see here, everything's negative, and the stock market obviously sold off. Now, even though the retail sales in the UK were relatively strong, came out much better than expected. The CBI data came out better than expected as well, and that's one of the reasons why I subsequent long later on. So we had a bearish European market, so obviously that was causing tremors of it. Okay, so that caused a potential risk-off scenario, and the FTSE followed the European markets lower. Okay, so everything was bearish. Everything was followed lower, and bias certainly was on the downside. So that remained bearish. So that's basically why the FTSE sold off. Now, not only that, the other factor that I didn't take into consideration was the elections with regards to UKIP. Now, Ashraf Laidi has touched upon this, and it is very important to focus on this as well, with regards to potential defections and the impact it's going to have with regards to elections coming up. So I think we're underestimating that factor. So that's going to be very, very important. Okay, with regards to the elections, so that's something that we're going to focus on. Sterling impact from Rochester Stroud by-election depends on the UKIP majority and how many more defections. Okay, so this is going to be quite interesting going forward. Okay. So let me just bring up some information for you with regards to the Rochester Stroud by-elections. Bear with me. And this is obviously going to impact sterling, and this will have an impact on the FTSE as well because of political uncertainty. 1 second. Okay, so as you can see here, I mean, you can see on BBC here, votes are being counted in the Rochester Stroud by-election where the UK Independence Party is hoping to gain its second elected seat. Turnout was just over 50%, triggered by MP Mark Reckless defection from the Conservative to UKIP. So that's obviously the second individual, and God knows how many more there'll be. But any news like that is going to be negative for the FTSE, and that's not something that I actually took into consideration. Okay, and that will potentially be comes under social. Political, social, not under, social as well. Yes, so certainly social uncertainty, social and political uncertainty, and that basically creates a risk-off scenario. And ideally, it's a political uncertainty, so that will create a risk-off scenario for the markets. Okay, so just bear that in mind. It's very, very important to focus on that aspect as well. Okay, even though the oil price has moved higher to 76.5. And certainly has propelled the FTSE higher to a certain extent, but we'll discuss that shortly, exactly what happened thereafter. Okay, so European data obviously sent the FTSE lower based on its following its peers, and if I bring up a chart of German DAX, you'll be able to observe. Bring up the German DAX here, and as you can see here, we had an HNS formation. Now I did take this trade on the downside, so I did benefit from this short. As you can see, HNS formation here based on weaker German data. Okay, and the market obviously sold off up to the 200 MA. Once we got to the 200 MA, we had a nice little reversal. Okay, so that's basically what happened. Then what led the rally higher? Well, the rally higher basically on FTSE, and that's the only thing that I'm focusing on right now. The rally higher on the FTSE was predominantly based on the fact that we had stronger data, CBI data, and obviously retail sales. They were the two factors that we were going to focus on in terms of economic data. Retail sales much stronger than expected, coming at 4.3%, and the CBI data came out stronger than expected as well, and that came out at 3 as opposed to -6. Okay, so there were two factors, and as you can see, when you have a downward sloping expanding wedge formation, then that generally tends to signify a potential reversal is coming. Okay, and as a trader, that's something that you focus on. Now, we had previous support, equal resistance as well in that zone. We were approaching pivot S3. Okay, so we had this formation here, and you can see that we had some potential exhaustion. Okay, so that's something that we were going to focus on. We didn't even create the right shoulder for a reversal, we just rallied from the gates. Now, that was also given the fact that if you use intermarket analysis as well, the intermarket analysis suggests that the markets, from an intermarket analysis perspective, the US markets were potentially into support and looking for a reversal. Okay, so then add in the fact that we are thereafter in the US markets, you got consumer price index slightly higher than expected. Okay, and although that should be potentially negative, you have the opposite effect. Jobless claims came out higher than expected. That should be negative. Okay, but the PMI data basically came out negative. So again, it shouldn't really be spectacular. European consumer confidence came out negative. So again, that was a risk-off scenario. Existing home sales came out, well, not exactly spectacular. Okay, and month on month did come out in terms of sales on a month-on-month basis. Certainly did come out slightly better than expected. Philadelphia manufacturing index almost beat by twice as much. Okay, and that obviously sent the US markets higher as well. And given the fact that the minutes yesterday from the FOMC focused on deflation, so therefore they were dovish. So that itself contributed to the risk-on scenario. Okay, so that's basically what we're looking at from that perspective. So, and also we had Mr. Draghi speaking as well. Mr. Draghi did mention that he was going to utilize all of his tools that he had available to him. So that was a dovish speech, and that itself sent European markets higher, which obviously in concert with US markets, given the stronger than expected Philadelphia jobs, stronger than expected Philadelphia Fed manufacturing survey, that certainly pushed higher, and obviously existing home sales at 5.26 million, better than the previous 5.16 forecast. Okay, and the previous 5.18. That certainly sent the markets moving higher, because obviously the housing sector or the housing market generally is a good indicator as to whether the markets are bullish or bearish. Okay, so that's basically what we witnessed. Okay, now the FTSE itself had a catalyst anyway. Obviously CBI data and the retail sales were much better than expected, therefore that was raring to go anyway. Okay, all you needed was a catalyst, and we got one, and off we went to the races. Okay, so as soon as that US data came out, bang, off we went. Okay, so that's basically what we're looking at now. But where are we now after all that? Okay, so after all that's happened, we've obviously into gap fill resistance. So this is the gap that we created on the way down, and given the fact that oil prices moved higher as well. So if I just bring up a chart of oil, okay, let's just bring up a chart of oil. Here we go, light crude. So obviously you can see here we've had quite a spectacular rally on the 10-minute and the 60-minute chart at the moment. So although we are finding some potential resistance here. Okay, so yes, one hell of a rally. So that's basically what we're focusing on for now. Although oil price certainly is into this level, so it does need to take out this level here at 77, and then we can certainly get a more of a rally. But for now, certainly is into resistance. Okay, so that's certainly something that we're going to focus on. Now, given the fact that oil obviously is into resistance, given the fact that the FTSE is into gap fill resistance, then expect weakness with regards to the FTSE. So if I just bring up the chart of the FTSE again, and let's bring up a 10-minute, a 60-minute chart, should I say, get more of an idea. Now, this is something that's going to be something I'm going to be focusing on with regards to the FTSE, and with regards to the bearish pattern that's being created. Okay, so this is something that I want to focus on. Okay, and this is something that will be based on, given the fact that the yen now has broken the 118 and is around the 117.5 level. Okay, so this is the pattern that I would if I was a bear, this is what I would be focusing on. This is your left shoulder, this is your head, okay. Now, provided we stay below the 75%, so as long as we stay below 6,700, then down we go. That's why my trade is currently short FTSE, and my stop loss is above the 6,700. So my bias still remains down, even though oil price, yes, certainly did go higher, but that certainly is factored in now to a large extent. Okay, so this is basically my situation and my scenario. Okay, right. So provided we remain below the 75% fib, which is 6,698 to be precise, then you are looking for a H&S formation lower. Now, if you take the head, which is 6,720, and this is going to be very interesting. So because that gap that we have below, so 6,720 minus the neckline. Okay, so if I focus on the neckline just put you around the 6,630 level. Okay, minus, so basically you're looking at a 90-point sell-off. So 6,630, you're looking at 6,540, and that's basically a target that we'd be potentially looking for. Okay, so IHS equals, okay, so that's basically what we're looking for. Okay, now the gap below is around the 6,440 level, 6,450, so that's going to be interesting. Okay, certainly is going to be interesting, but for now, I mean, there is another gap here which hasn't closed exactly, which is exactly 6,540, and again that corresponds to 200 MA, so watch out for that. Okay, and now you also do have previous resistance equals support here as well, around the 6,560 level. So there's two levels that we're going to watch from that perspective. Okay, bear with me, here we go. Okay, so that's basically what we're looking out for from that perspective for the right shoulder. Okay, now that's a bearish case scenario. Okay, so given the fact that you've got this political uncertainty, given the fact that oil price is now into resistance, given the fact that sterling is now above 1.57, given the fact that the FOMC was dovish, so in a sense that's working against it. Now my real concern really will be, and pure concern will be, on this Rochester and Strud election. So if we get more conservatives defecting, then that obviously will have a negative effect on the FTSE going forward. Adding the fact that USD JPY, the focus will be on USD JPY, the Asian markets as well. So if we get any weakness in the Nikkei, any weakness in the USD JPY or Euro JPY, then again that will cause resistance. If we get a rally in sterling, or if we get a rally in the euro, given the fact that the FOMC remains dovish, then again that will have a negative impact as well. Now, one of the important factors here to consider is the dollar index. Now the dollar index, one second, let me just load up my charts again. Okay, so right, one second, seem to have lost my pro real-time charting package. Okay, so let me just get this fired up again, bear with me. Okie dokie. So like I said, any rally in the sterling, okay, any rally in euro will be negative, because remember, it's all about currency wars. Everybody wants to deflate their currency to help their exports. So if obviously Japan is deflating, it's taking all the exports from the international stage, and it's putting pressure on all its peers, okay, in terms of economic expansion. Okay, so just bear that in mind. Right, let's just see exactly what's going to happen here. Okay, so 60-minute chart, you already know. H&S formation, watch out. Provided we stay below the 6,700 level, then watch out for the position below, and that's going to be very, very important in terms of understanding the market going forward. Okay, with regards to the FTSE. Now, whilst we're here, let's just quickly have a look at the FTSE 250. Now, this is going to be interesting. Why? Because the focus remains on the larger time frames. Okay, so let's just bring up the FTSE 250 whilst we're here. Where are thou? There we go. FTSE 250. Okay. So the reason why I bring up the FTSE 250 is because there's a very, very important formation here as well. Now we also have a H&S formation on this as well. So you can see your left shoulder here. You've got the head that's already been put in. We're looking for a right shoulder, then down we go. Now we also, on this, we have a gap fill. Okay. So if I just draw in my gap level here, bear with me, as you can see here, this is your gap. Okay, on your 60-minute chart, your head is around the 15750 level. So let's just draw a projectile H&S formation. So H, okay, H and S equals 15750 minus 1550 roughly equals 200 points on the downside. So that's 15350 if I'm correct on average. Okay, if I just take the 15750, 15530, okay, let's just call it 530. Okay, 30, so it's 220 points on the downside. So you're looking at 15300, 15310. Okay, so that's basically what we're looking for. Okay, right, so if that's the case, then you have a gap level there. This gap level is working out to 15275, and we have a gap level here 15390. So there's two levels that you're looking for. Okay, so on a now the FTSE 250 is highly dependent upon the currency. Okay, so if sterling were to increase, now there is one caveat here, right? Okay, and the caveat is that the BOE minutes that were released yesterday had two individuals that were dissenting. Okay, and they were looking for a rate increase, and they were hawkish. So out of 9, 2 were hawkish. Now, if you are going to be a bear and you want to focus on the bearish side, then you would interpret those minutes as being hawkish. Okay, and there, because there's already two dissenters which are obviously influencing everybody else. You're looking for a move higher in sterling because of higher real wages starting to uptick as well. Okay, and then in turn will cause obviously sterling to move higher, which in turn hurts the export sector. FTSE 250 being obviously an export orientated index. Okay, because of the smaller cap stocks with regards to exports, and that itself will create the H&S formation and create the catalyst for this to be triggered. Okay, just bear that in mind. Adding the fact that you've got the political uncertainty as well, which I've already mentioned, and given the fact that oil prices are into resistance, given that European data and Chinese data that came out in the last 24 hours was very bearish. Okay, and you're looking at a not so fantastic FTSE 100. Okay, so that's basically what we're looking at. So now we're going to go to the larger time frames. Now that my charts are hopefully loaded again. Okay, so FTSE 100, basically larger time frames. We have resistance confirmed at around the 6720 level. We already have horizontal resistance. The 200 MA is proving to be hard. We are into the 75% fib resistance level around that region, and we're into 200 MA, and we're looking for a potential pause and a reversal. Okay, that's basically what I would come with that summary so far, especially given today's price action. Okay, now FTSE, let's just have a look. The next one that comes up, FTSE 350 again. We have come into previous support equals resistance. We've come into 200 MA. Yes, we have taken out the 75% fib, so that's certainly something to bear in mind. But having said that, we are still struggling, so therefore we would assume and presume that that will be resistance. Obviously, if that's taken out, then off we go, and we're going off to the races and testing the new highs, or testing previous highs anyway. Okay, so let's have a look at the next one. The FTSE 250 is probably the most interesting chart of the lot. Okay, I did expect this to continue higher, like I said, because US markets obviously are continuing higher. But this has certainly been this resistance has certainly been confirmed. Diagonal trendline resistance, 200 MA resistance, and bearish engulfing candle. Okay, and given the fact that today's price action was in the lower 10% of that previous red candle that was bearish engulfing, that's not exactly a positive sign. Okay, so if you add all those factors into consideration, then you are looking for a potential breakdown. So if I just take these pivot highs together, and you are now looking at a potential breakdown. Okay, so when you have a rising channel, okie dokie, you have a rising channel, and you're basically looking for a breakout of this channel. Okay, so not all channels continue and remain in that channel. So basically, you're looking at diagonal trend line resistance. You're looking at a breakout of this channel, and given the fact that sterling will obviously be a factor, so keep an eye on sterling. Any breakout higher of sterling will be negative, and this will break down as well. Okay, so that's basically something else that we're going to take into consideration. Although, like I said, you do have an inverted head and shoulders formation, and everything still remains bullish. And US markets obviously were quite spectacular today, with the Dow back at 17,700. Hence the reason why my bias was still in the bullish camp, because the FTSE is playing catch up to US markets. Also, given the fact that Aussie and Kiwi are now reversing higher and have been pretty spectacular, especially with regards to the FOMC minutes remaining dovish, a dollar into resistance helps commodities, and the FTSE generally tends to move higher regardless, because it's all about the Kool-Aid. But that obviously wasn't the case today. Okay, so these are all factors that you have to take into consideration. Adding the fact that the European data this morning, bad data was considered bad data. Bad data wasn't considered good data, because bad data justifies QE, and obviously stock markets love the Kool-Aid, and the stock markets generally short squeeze higher. But that isn't the case. Okay, and that wasn't the case today. So we're having a change of characteristic. Okay, so that's something that you take into consideration as well. Okay, when you're trading the markets. Now let's just go into sector analysis, and hopefully that will give you an insight, and you should be able to do this yourself. Okay, the pharmaceutical sector. Okay, pharmaceutical sector, ever since we've obviously closed that gap. Now let's just have a look at this on a daily chart. Okay, daily chart, you're looking at a doji, and we are looking at horizontal resistance, which has been held. 60-minute chart at the moment, yep, you have a bear flag formation. We made lower lows, lower highs, and certainly it seems we've got an unfilled gap below, so that's something certainly to take into consideration. So that price action isn't bullish. Now we've got the banking sector. Banking sector obviously was very weak in the morning. Now it looks like this banking sector, given the fact that we've held that resistance, and we've broken this key trend line support here as well. You're looking at the next one is looking for gap fill below. Okay, that's something that we're going to keep a focus on. Now oil and gas, yes, we've had quite a spectacular rally. We closed this gap higher. But we are approaching resistance. Given the fact that oil is into resistance, this will certainly be pulling back as well. Okay, retail sector has had quite a good run as of late. Okay, and now we are looking at potential lower high, and given the fact that we did close a gap today, we're looking at potential lower high, and the next move would be potentially lower. Okay, let's have a look at the building and construction sector. Building and construction sector again into resistance, given the fact that it's all about interest rates. Okay, so keep an eye on sterling. Any move there, then we'll take that into consideration. Now our biggest concern is given the fact that we've got on the daily chart on the US dollar index, all you can see there is consolidation for a move lower. Okay, given the fact that those FOMC minutes were dovish, okay, that means that sterling will start to push higher versus the dollar, and that will certainly exert pressure. Okay, so that's something to certainly take into consideration as well. Now I can have a look at BP and Shell, but I think I'll make this video too long. That's something that you can certainly analyze yourself. The mobile telecom sector, as you can see here, ever since we broke out this rising contracting wedge pattern, we've been in this downtrend, so lower lows and lower highs, and that doesn't bode well for the FTSE itself. Okay, so we're in this bearish channel, so therefore the next move is lower, and we have this unfilled gap below to close. So the telecom sector will certainly exert pressure on the FTSE, and what does that mean? It means that we're going lower. Okay, so again, hotel industry, given the fact that we've had the bird flu, okay, breakout in Yorkshire, I think it was, so that's going to exert pressure on the FTSE. I'm surprised it didn't do that the day before, but the market is a market. Our stop loss was hit, and we move on to the next trade. So we've broken out. We're looking at this potential formation. You're looking at a left shoulder here, head. We're creating this right shoulder, and then down we go. Okay, you've got an unfilled gap below here, and then you've got an unfilled gap below here. So that's the bird flu gap. Okay, call that the bird flu gap. Okay, so that's something that you're going to be focusing on. Previous resistance equals support, so you're looking at 7,500 support. So every index that I'm looking at thus far is indicating to me that the FTSE wants to fall. Okay, so what does that tell you? From health and travel and leisure, from mobile and telecoms, from oil and gas, from retail, miners, etc., etc. Okay. So that tells you that we are potentially into a risk-off scenario, and the FTSE is into resistance, and that 200 MA will hold, and the market will collapse. Okay, that's basically what I'm looking for. Now, whilst I'm speaking, the yen as USD JPY has just dropped about 60 to 70 pips. on Mr. Aso stating that USD JPY or yen has weakened too quickly, too fast. So that in itself means that yen is starting to strengthen. If the yen catches a bid, that means it's risk off. The carry trade will unwind, and the equity markets that are linked with the yen will start to sell off as well. That will catch a bid. US dollar will catch a bid potentially as well. Okay, so that's something that we're going to take into consideration, and we'll see exactly what that means for sterling, euro, and Aussie. Okay, these are all factors that we're going to take into consideration, and as always, we follow Asia. So if I just load up my Reuters platform quickly, and let's just have a look at what's happening with regards to the Asian sessions thus far, given the fact that it's almost 2:15 in the morning. Okay, so the Hang Seng is negative so far. The Shanghai at the moment is negative, -2, and the Nikkei obviously will be negative because obviously USD JPY has sold off and the yen has started to appreciate. So basically overall Asia still remains negative. So given the fact that Asia is negative, it's only 2:15 in the morning, that will obviously will not bode well on European markets, given the fact that the economic data in Europe was pretty dire anyway. Okay, so we are approaching and we are facing a risk-off scenario, folks. So my short on FTSE from the I've got 6674 average, okay, and looking at a potential move on the downside. I also have a short on the Nasdaq with subscribers and the live analysis service. It's been a very tough week this week. Finally got into the black and plus 25 thus far, and currently have shorts in the Nasdaq and the FTSE and looking for lower prices. And obviously I've explained my setup and I've put forth my argument. Okay, folks, risk on, risk off, wax on.